after the close. As you know, I'm on this drive, happen to be at the gas station. We've got a few minutes left. I have everything I want to say. It's a pretty brutal day out there, but despite the brutality of today, I'm not doing anything different, and I'm not even afraid of possible additional downside. Friday, we have a quad witching. Historically, quad witchings are down. They are typically very volatile days. There's tremendous option expiration on that day across various asset classes of options. And it's possible we have another down day that day that is something like this, and we get to 3,500. However, let me give you a couple interesting statistics because I'm positioned in a very specific way. I've been doing very specific things, and the things I'm highest conviction in are green today. Like, for example, Schlumberger puts, which we took off today. We sold the puts. Those had a very good gain. We had those for about a week. CRISPR's up. What exactly am I talking about? Well, ARK has been the center of all this. Everyone has wanted to dunk on and roast Cathie Wood and says Cathie Wood is the reason for this problem. She, got super exuberant, was all in, et cetera, et cetera, et cetera. But here's an interesting statistic. So over the last several days, weeks, et cetera, you've seen the market continue to hit new lows. As a matter of fact, today, you saw the low of the day in the last hour of trading. ARK, on the other hand, has not seen a new low since May 12th. That's over a month ago. ARK has not seen a new low in over a month. Today, it hadn't seen a new low since an hour after trading. That was the low. It hasn't even seen a new low today, I believe, for the entire week. So ARK is in this pattern of higher lows for ARK. Additionally, that low, that year-to-date low that was over a month ago, was the highest volume we've seen on the NASDAQ since then. So what I'm reading from this is the stuff most sensitive to rates. The biggest fear, it seems, obviously economic stuff is coming in the fear pipe. We're going to talk about that in a second. But ARK seems to be a proxy for the level of panic. If we have higher panic, we have lower ARK. The stock is down not over the last several months, but over the last year plus. So I think considering we're seeing higher lows, that can indicate the first signs of a bottom. We're going to have to see. As I said, quad witching this Friday. I'm not saying it's today. I'm not trying to call a bottom right now. I'm just trying to say that there are some interesting things going on. And I don't own ARK. I actually happen to think the largest position in ARK is ridiculous, Roku. But nonetheless, it's a proxy for a whole lot of things. And as an ETF, is not something to ignore. And especially for how popular it is, how much people like to dunk on it, et cetera, et cetera, et cetera. So I'm seeing some positivity there. We haven't hit a new low in ARK in over a month. That's tremendous because we are hitting, you could go back a year on the S&P 500 and we're down, but ARK, we're up from like a month ago. So that's not the same for other areas of the market. I just want to really hammer home this point because ARK is down tremendously. Other stocks are also down tremendously, not as tremendously, but they have less reason to get as far down. I just want to articulate once again, ARK hit its low over a month ago. And that day was there were characteristics of that day, May 12th. We have got a cool. Let me turn the AC on a little bit. Anyways, on that day when ARK hit that low, we still haven't seen NASDAQ reach that kind of volume since then. As for the economic concerns, because now people are worried about recession, etc. We've had recessions in the past, right? The median decline for a recession is 24%. we're at about down 24% in the S&P 500. Not saying we're going to get a recession, not saying we're not going to get a recession. What I am willing to rule out, though, is a higher end of the spectrum recession. Some recession that falls meaningfully above where the 24% range issue situation ends up. Why do I say that? Well, let's look at the last recession, the global financial crisis. That is the example of an extreme recession. The global financial crisis had structural flaws that caused the situation. It wasn't caused by higher rates. We've risen rates, and we're actually going to get into an example. The last time we hiked rates by 75 basis points. We're going to talk about that in just a second. The global financial crisis enabled people to buy homes without income verification. They were offering no income verification loans. Think about that. People have their home, a lot of their net worth in their home. Everyone's told the American dream. They save into their home, etc. And all of a sudden, they'll decide, hey, it's a good idea. Let's do no income verification loans. So you have somebody making not that much money buying a multi-million-dollar mansion, okay? In the extreme case, of course. No income verification loans. There are laws against that. There are rules against that. That's not happening. What's happening here is that rates are going up. Something that has happened many times throughout history. Many times throughout history. And borrowing is going to be a little bit difficult. So when borrowing's a little bit difficult, people don't spend as much because they don't have that borrowed boost. Okay, I think we have to acknowledge that the economy is not going to have 3, 4, 5% GDP. It's not going to have the same rates we saw when we were comparing it to a pandemic. However, let's remember one thing. The stock market is a forward-looking mechanism. It's not worried about what's happening tomorrow necessarily. I mean, yes, obviously data will swing things, but it's worried about the 6 to 12-month timeline. People want to get in ahead of the news. They want to be first. That's why a lot of the times you see buy the rumor, sell the news. These are things that just happen. These are common events in the stock market, ways that things occur. The Fed is hiking 75 basis points. It hasn't done so since 1994. 1994 happened, they hiked rates by 74 basis points. There was a little bit of a recession. There was multiple rate hikes. The Fed got into this rate hiking cycle. You know what happened after 1994? After the Fed hiked 75 basis points the last time they did, and then they did additional hikes after the 75 basis points? The stock market did have a quick dip, similar to what we're doing right now, but then it set up a nearly decade-long boom, and one of the greatest booms we've ever seen. Yes, it got out of hand. We don't want to see the latter stages of that. But we're down 35% on the NASDAQ. We've cut more than a third off the NASDAQ. The amount of stocks down 75 and 90% are close to the dot-com peaks. We have currently experienced a 20% decline in the S&P 500, 3 times faster than what we experienced in the dot-com bubble. So, as far as I'm concerned, we're doing a lot. We're doing a lot of work on the downside. And I get it. People are concerned about the economy. If oil prices tick down, you better not be that concerned about the economy, because unemployment's not that low. It can tick a little higher and nobody's going to notice. And oil prices are going to be lower. And that seems to be the number one thing hurting people. So we'll see what happens. We'll see what happens. We're going to wait for this quad witching. I'm going to just hold on through. I'm not trying to sell and buy on the quad witching. I'm not doing that. Let's just see what happens. That's today's video, and until next time, peace out.